A good friend of mine once said, there's two things guaranteed in this life, death and taxes. Well, that was actually Benjamin Franklin, not really a good buddy, but he's spot on. Death and taxes are all you're guaranteed in this life, and today I want to share with you how you can get around the tax side of things just a little bit, and how you can take your real estate investment properties and sell those tax-free. Everybody is always worried about capital gains taxes when it comes to real estate investing. And I'll be honest, that holds people back sometimes because of all the taxes they're gonna have to pay on all the income, all that kind of stuff. Today I wanna tell you, you can actually sell your real estate investment properties tax-free. I'm gonna share with you how, show you the steps, the pros and cons, and why you would use it, when you would use it. So let's break it all down. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we get into today's video, take a moment, please hit that like button, leave us a comment below, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. I'm sure I caught your attention. Everybody wants to know how I can pay less in taxes, and definitely everybody wants to know how I can pay no taxes. And so today, let's break down how you can sell your real estate investment properties with no taxes. How can you do it? It is one big secret. It is called a 1031 exchange. So today we're gonna get a little technical, give you some of the ins and the outs of that, but a 1031 exchange will allow you to sell your properties tax-free and roll them into another real estate investment property. The only time that you are going to actually have to pay those taxes is when you 100% cash out of those properties and never reinvest the money. So if you want to sell them tax-free, you can do so. You're just going to need to roll that money into other real estate investments in a certain window of time. So where does the 1031 exchange get its name from? It's the section of the IRS tax code that explains this very rule. It's the 1031 exchange rule, basically saying you can pull money out of any or all of your investment properties, sell those properties, and then reinvest it into something of like kind that is of equal or greater value. As I mentioned, the properties need to be of like kind. That means that you cannot take this money out and then go invest it into stocks. That just doesn't work that way. It needs to be like kind. So it needs to be another real estate investment. And there are some ways that you can navigate around actually owning a physical building. There are some mineral rights and some of those things that you can get into on the real estate side of things, and that's super duper technical, and maybe we can do another video about that in the future. But let's just assume that if you're going to use this code for simplicity purposes, you should just take a single family home, buy another single family home, sell a single family home, buy a multifamily property, but it needs to be a real estate investment. And you can actually take single family residential real estate and even convert it into a commercial purchase. So it can be done, but it just basically should just be for simple purposes from real estate to real estate. And if you choose to get into the nitty gritty, you can look that up on your own. A 1031 exchange does have some strict rules that you need to follow, as you would expect from the IRS. They're gonna slap some rules on that, make sure that you follow those rules so that this can be done properly. And some of those rules actually include some accelerated timelines on some things. So it's not a simple process to do because there are some timelines. Those timelines, you actually have 45 days from the day you sell your property to identify another property that you will replace it with. That does not mean you have to close escrow on it, because we all know that if you've done any sort of real estate transaction, escrow is about 30 days. So that would have only left you 15 days to find something, but you've got 45 days to get out there and look. So you're gonna have to operate within that time frame and be ready to perform on it right away. Now, I said you got 45 days to actually get a property identified, and then you've got 180 days, starting from the same point as that 45 days, to actually close escrow on those properties. So this can be done. It does take some time and some maneuvering of things to make sure that it can be done right. Failure to meet any of these criteria could disqualify you from an actual 1031 exchange, and then you're actually gonna owe that capital gains tax. So to facilitate this, you'll actually need to work with a 1031 exchange intermediary. you're probably gonna pay about $1,000 to have somebody do this for you, but they're gonna be the ones that actually receive the money, because the worst thing that could happen would be the money hits your account and you somehow spend it, then it's definitely gonna be taxed on. So they receive those funds and then help you transfer those funds back out when you make that purchase. And they're gonna help you along the way with some of those timeframes, along with the real estate professional that you're working with there. So it's important that you stick to those timeframes, as well as make sure that you are investing in something of equal or greater value. Another piece that people don't think about here when I'm talking about equal or greater value is that you could actually invest this into multiple properties now. So you could cash out of one property and take those proceeds and invest it into two. You just need to make sure that those two properties are equal or greater value than what you just sold. So this is a great way for you to build your portfolio and continue to scale your business. There are many investors out there that use this every few years to scale up their portfolio. I talk about it all the time in our videos, how we should be looking to leverage some of the money that we've got in properties, and you can do a cash out refinance to do that. Or in this case, because a cash out refinance will only allow you to pull out 75% of your equity. You have to leave that 25% down payment in there. So a 1031 exchange is nice because you get the 100% of that equity, right? Obviously you're gonna have your fees and all that kind of stuff that went into the real estate agent and escrow and title and all of that, but you get to tap into 100% of that equity and then reinvest that. So if you can't tap into that equity and find a down payment using a cash out refinance, then a 1031 exchange is a great option that can help you continue to grow your portfolio every few years, just taking advantage of appreciation, as I say in just about every video that we do, 5% a year on average appreciation in real estate. So you'll get to pull that money out and go reinvest it in 1, 2, 3, however many properties that you desire, as long as you can fit into the financing regulations for it. So let's take a minute and talk about when it would make sense to do the tax-free 1031 exchange. Number one is when the real estate investment that you purchase just isn't working out. And we've seen that as certain areas have actually shifted their short-term rental laws, and some of those pieces, we've actually seen some investors that are caught holding a property that they thought was cash flowing because of the short-term rental side, and it was, but now with rules and regulations changing, they weren't able to get permits, and now they're stuck holding a property that won't cash flow. That is a great scenario that they would use a 1031 exchange, take advantage of the appreciation that they had over those years, cash out, and they can move it to a different market. It doesn't have to be in the same area. Pull the money out, go reinvest that money. Number two would be to upgrade to a higher value property with bigger cash flow potential and appreciation potential. So again, let's assume you took a $500,000 property, sold that, and you had $200,000 worth of equity, and you were able to go buy two $500,000 properties with that. And now you've got two properties appreciating with 500,000 makes it $1 million appreciating at 5% a year. So you've doubled your appreciation, along with potentially increasing your cash flow, because now you've got 2 units appreciating, 2 units creating the cash flow, and you're making more money. So if you're looking to scale the portfolio and increase cash flow, increase appreciation, the 1031 exchange totally makes sense. As we said, this 1031 exchange can help you sell those properties tax-free, take that tax, and you're essentially deferring it because you're putting it into a future property. And if you ever cashed out of that property, you'd have to pay taxes on it. But you continue to build that portfolio and you never have to sell those properties, right? You can continue to 1031 exchange and grow your portfolio over and over and over and over and over again. And you could end up never paying capital gains taxes ever in your life. And all you're doing from there is collecting passive income, earning appreciation, buying more properties, getting more passive income, and growing it from there. So I would tell you a big piece of advice here and a big takeaway is constantly evaluate your real estate portfolio to see if and when this would make sense. So it doesn't always make sense right off the bat, but you should always be looking at how much equity do you have in your current properties? What is your cash flow? And if you have properties that are underperforming, you may look to see if you can up those by doing a 1031 exchange to buy another property that's just a little bit more expensive, or buy multiple properties that are more expensive that have better cash flow numbers. So keep that in the back of your mind. You should always be evaluating that portfolio. I do it on a monthly basis to keep an eye on cash flow, to keep an eye on appreciation, to know how much money I have in tappable equity for a cash out refinance, as well as how much equity I have factoring in real estate costs and all of that stuff if I was to actually cash out of those properties fully and use a 1031 exchange. And I've got that in the back of my mind anytime that I'm evaluating a real estate deal, because I know that's money that I've got some ammo behind me. If the right deal comes up, it may make sense to just get one of those homes on the market right away, sell it, and buy the other place. Or again, tap into the equity if necessary. So always evaluate that real estate portfolio, whether that is monthly, quarterly, biannually, whatever it may be. Evaluate it, make sure you're keeping track of those numbers because it will help you remember that you've got some firepower behind you to be able to do tax-free purchases, tax-free exchanges along the way using Section 1031. So I hope today was super helpful for you. I hope it expanded your thinking and stretched your thinking on how you might be able to acquire future properties. Don't let the idea of capital gains taxes stop you from doing real estate investing. There are ways around it. The IRS rewards you for buying more properties and for basically creating more affordable housing. You're not skirting the law. They've created it there so that you would buy more and create affordable housing through creating rental properties and creating business spaces and all of those that they'll collect taxes on those businesses once they move in. So it's a great way to earn and grow your wealth. If you enjoyed today's content, please hit that like button. Don't forget to leave a comment. Tell us about maybe a 1031 exchange that you've done in the past. How easy was it? And don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.